Well, this isn't weird because, well, for some it might be. Stocks rallied yesterday big time after the U.S. and Mexico reached a preliminary trade deal to replace NAFTA. The S&P 500 and the NASDAQ both setting record highs for the second day in a row. Jonathan Hoenig is the hedge fund manager at capitalistic.com. Jonathan, NASDAQ 8,000 coming, about 8 months since it hit 7,000. Does this remind you of the dot-com era?
Well, I remember that era very well. I don't think we're yet at that level of exuberance. That's one of the positives this market has going for it. And you know what? This is a bull market. Just look yesterday, over almost 300 new 52-week highs, only about 50 or 60 new 52-week lows. So the bull market's intact. And although many are saying that the president's announcement is more of a rebranding of NAFTA rather than an entirely new deal, I do think this announcement between a trade deal between the U.S. and Mexico could alleviate some of those fears of further tariffs, because that had been the major things putting a damper on this market. Fears about new unexpected tariffs. The fact we have some consistency and some clarity, I think bodes pretty well moving on. And in fact, the future is now flipping higher as well.
We see a president that everyone, critics especially, said he's all about the trade war. No, he's about the trade deal, as we saw with Mexico yesterday, and the market reaction to that. The U.S. Trade Representative Robert Lighthizer said these talks with Mexico have been successful, but he's open to talking to Canada. Listen.
We had thousands of people at several rounds. The last few weeks, the president decided, let's focus on Mexico. Let's get a deal done with one. The truth is, he's right. It's very difficult to negotiate with two people at the same time. So we negotiated with Mexico. We got a great deal for them and a great deal for us. Now it's time for Canada to come to the table.
Well, will Canada come to the table? Because, Jonathan, we know that their representative is in town. She's in Washington, D.C. Are we going to see a deal here?
We should want them to come to the table. They should want to come to the table. Canada is our second largest trading partner. And let's not forget that a lot of, quote, American cars are manufactured in the U.S. for export to Canada or vice versa. This trade relationship is beneficial to all countries involved. So, yes, we would hope, and I think you'd see the market even breathe another sigh of relief in fact, when Canada does come to the table. One fear, however, is that of higher prices. One way or the other, this deal will force higher prices. It's forcing higher wages to be paid, also forcing higher prices for steel and aluminum to be paid. Mm-hmm. So U.S. Car buyers could see their prices for their cars go up despite this deal being made. That being said, the markets like it, and you saw it yesterday with that 200-point bounce.
I'm going to get one quick additional question in here. We have a bilateral deal right now with Mexico. We're looking for one to get Canada in that mix. Talking to the European Union, is all of this a way to reach separate deals to get China in the end? To get China to come to the table and do what we want?
Well, that certainly seems to be the president's modus operandi here. Strike these individual trade deals and then hopefully get other countries on board. That would be the best thing. We still have these tariffs on aluminum, on steel in place with many countries, including China. The quickest we could get to little tariffs, no tariffs, and free and open trade, the better for all involved, especially America.
Jonathan, thank you very much.
Be well, guys.